Hi, everybody. I'm Scott Callon. Thank you so much for joining today. I'm working off the presentation that's in front of us. It's also available on our homepage, FY23, so March 2023 Q1 corporate presentation. I'll go through the numbers and then we'll take a look at kind of what we've been doing on the technology front. So next page, please. Personal Tech for a Better World. That's what we stand for, and that's genuine. So starting with the key points. It was actually a strong quarter, but a really complicated one from an operational execution perspective. The sales were down 13% year on year. This is in part as we wind down our smartphone LCD business, but it was an absolutely extremely difficult quarter to manage through from a supply chain perspective. As you know, the Shanghai lockdown occurred during the quarter. It pushed down our auto sales quite a bit. We have a major back-end fab in Suzhou, which is right next to Shanghai. Anyway, it was a very complicated quarter from a supply chain management perspective. Our operating loss widened by 1 billion yen year to year on lower sales, but we actually crushed our forecast. There was substantial improvements, cost reductions. We know, and the great thing about the auto business is it gives you very long-term visibility. So we know we've got a very strong rebound in orders coming from Q2 onward in the auto space, and we benefit from a weaker yen. So all those are incredibly important. Probably the most important being cost reductions. We really have had a significant focus, and the major contributor of the upside is cost coming in lower than forecast. We need to decrease our sensitivity to the market environment. One of the ways you do that is take out fixed costs. So that's a very, very solid and ongoing improvement we expect to see taking us forward. Our net loss improved substantially and again, massively outperformed the forecast due to the above positives and also a recording of an FX gain. And we're keeping our full year forecast unchanged. Well, that's a way of saying massive outperformance in Q1. That could imply that we're going to raise the full year forecast, but it's a very difficult world out there. We're seeing inflation running at the highest it's been in 50 years. There's a war going on in Europe. Consumer purse strings are being tightened. We think it's appropriate to be prudent about what the next 9 months looks like. Next page, please. So look, I'll go through the numbers kind of pretty quickly. You can see on this page, we've got a year-on-year dropping off in a very substantial size in mobile US and European, and also to some extent in China. This is again in US and European is winding down kind of our high-end LCD business. That's kind of per plan and exactly as we expected to be. There's a very substantial inventory adjustment that's gone on, and it's still going on in China, which is a major smartphone market. As you can see, offsetting those to some extent is a big increase in automobile sales, despite kind of all the things that happened during the quarter, and that's on the Shanghai lockdown being the most important among them. So a small year-on-year downward move in terms of profitability that is driven primarily by the Shanghai lockdown effects. Turn to the next page, please. And taking a look at versus the forecast, you can actually see, despite the very big uplift that I just described on the previous page, that we thought we were going to do a lot more in autos. So here, the visibility of the Shanghai lockdown is far more apparent. And we actually did more than we expected in US and European mobile activity. We kind of came flat on in mobile and some slight improvement on the non-mobile area. We are a beneficiary of the strong yen. We have a lot of costs in Japan. At 135 yen to the dollar, we arguably are the single most cost competitive G6, which is a major fab in Chiba outside of Tokyo in the world. So that's contributory to us having a strong kind of tailwind in terms of our earnings going forward. Next page. You can see the breakdown, both on a year-on-year on the left-hand side, on a quarter-on-quarter, big drop-off in volumes. That is, some of that is going to be the secular push down in LCD, which is strategic, and some of that is more of it actually is this kind of punch in the face, which was the Shanghai lockdown. Look, the world understands Shanghai to be a major global financial center, which is totally correct. It's also a massive high-tech manufacturing hub. So when things go wrong in Shanghai, it really does affect the global supply chain. Next page, please. In terms of what's going on in the business environment, I'll turn into kind of much more detail as what we're doing on the technology front. But broadly, robust automotive demand and weak mobile and non-mobile demand. And non-mobile, significant amount of that is metaverse, kind of VR headsets, much more discretionary spending. It's interesting, although autos remains to be very, very strong. And so the key is to drive down our costs and to drive sales and reduce the costs at the same time, and being smart about kind of how we operate with respect to changes in the operating environment. And we've got some, description activity, which I won't get into a lot of detail, because this is mostly managing our way through our current business environment, which is super important. But the other element of it is, what are we doing on the technology front to deliver proprietary global number one technology? And I'm going to talk about that in more detail in the next section. So we'll just jump to that. Lots of things going on, a lot of actions we're taking in order to respond to them. And we've got a series of world firsts in terms of a technology rollout. And it tells you, if you want to be first in the world, you need to be fastest in the world. JDI has gotten very, very fast. So you should fully expect from us and monitor for us for our ability to manage well and quickly during these kinds of downturns. And we're currently experiencing a downturn in the consumer side. Next page, please. Again, depreciation is a clear positive, but we're not adjusting our full year forecast despite having kind of blown the doors off Q1. And that speaks to, we are concerned about what's going on in the world right now. Q2, Q3, and Q4 could be weaker than expected. And at this point, I would expect that at the end of the first half, so it's our November announcement, we'll have kind of more guidance for you as to how we think the year ends up. And we're doing all the things that we need to do in order to grow as a technology company. And I'll turn to that next. Next page, please. So turning to the operating environment and kind of more broadly, kind of what we're doing in the environment. So I already touched on the Shanghai lockdown, which was, basically a night fight in the typhoon. It is kind of over, and the negative effects have been largely resolved. The most important element of what we're doing is the second point. We have developed and we announced a series of proprietary global number one to new technologies that, and we'll talk to them in more detail later, but truly transformative for the industry and certainly for us. We unveiled our MetaGrowth 2026 growth strategy on May 13th to talk about how we're going to drive our transformational growth. We're accelerating ESG initiatives. We're doing a lot of things on that front, and we've also taken steps to close our Higashioda fab, which will take out about 9 billion yen of costs starting next year. So we understand both where growth comes from and how our cost structure kind of can be improved over the next 12 to 18 months. Next page, please. So in MetaGrowth 2026, we articulated 6 proprietary growth drivers, meaning these are JDI only technologies. Look, if you're going to contribute to the world, and that's really, really important to us, you need to offer something different. It's not super useful to be firm number 5 or firm number 6 offering a technology that 4 or 5 other firms have brought to market. It's also a terrible way to make money as a company. And so it's absolutely critical for us. And we have retaken technology leadership, and that's at the heart of our business strategy and our social contribution strategy. We are delivering technologies that no other company has been able to create, and they're going to be absolutely transformative. I'll talk about in some detail eLeap, which is our next generation OLED technology. We began sample shipments this month. We're well along the way with commercial products and discussions with customers. We're also working on technology license with, at this point, what have been our competitors in the market, in the display technology market, and increasingly, likely many of them are going to be our technology partners. HMO, high mobility oxide, we have an open strategy for that one in terms of our licensed activity, and we're in discussions with multiple potential technology partners. In the metaverse space, I'll also talk about this later, but the key elements are we're pushing ahead with super high ultra high, super ultra high definition VR displays at 2500 PPI. And we're beating prototype production with our HMO technology for VR displays. Next page, please. In auto tech, in addition to eLeap, our next gen OLED technology, which is super relevant to the space, you should know that OLED has almost no market share in the auto space. And the biggest issue is that it doesn't have the reliability and the durability to survive well in an auto environment for 5 years, for 10 years. And our eLeap technology offers 3 times the lifespan. So it is the breakthrough technology that's necessary to penetrate the auto space. I would also point out that this is, and what's special about eLeap is it's the world's first maskless OLED technology. We're not using fine metal masks, and the result of that is you can get much higher precision and much higher durability. You also get the ability to do free shapes, so the ability to do, most phones and things are square. That's also a square phone is perfectly fine. It's also linked to the fact that metal masks, are squares themselves. When you take away the mask, you have the ability to design all sorts of shapes that is particularly relevant to the auto market. We want to be able to put the displays in all sorts of configurations within a highly designed, highly aesthetic car. So in addition to eLeap and HMO being super relevant for auto tech, we also have high customer interest in our other proprietary technologies, including privacy view, integrated cockpits, and advanced head-up displays, where we're #1 in the world. I'll talk about Real Clear. Started as a technology that was small because it's really, really hard. We're the only company in the world that can make two-way, fully transparent displays. That's why Real Clear is what it is. If you start on the C and you go right, it's clear. If you start on the C and go left, it's also clear. It is the only Real Clear from 2 directions technology, display technology on the planet. And in terms of new tech products and businesses, we're rolling out a whole bunch of things to our external hover sensors and flexible LTBS TFT pressure distribution sensor. That's a bunch of words. It's a way of saying we're able to do super highly precision and flexible sensors with some really interesting customer applications available to them. Next page, please. So I mentioned, and these are some photos of, we started customer samples this month for eLeap. It's an absolutely massive breakthrough in terms of OLED technology. Again, you get twice the brightness or half the energy consumption. You get 3 times the lifetime relative to existing OLED technologies. We made our Metagrowth announcement on May 13th. There's a fairly substantial presentation available and a video if you'd like to look at it. So we have more technology details in it, but this is an absolutely transformational OLED technology. And we're really excited about it. And we're moving very, very quickly. We expect to be in full mass production in 2024. And as I say, we're doing customer shipments, sample shipments from this month. Next page, please. In HMO, so that's high mobility oxide. The huge breakthrough here, again, we're the first in the world and the only people in the world who've been able to achieve this. We're using a target material developed by Idemitsu Kosan, which is a fantastic material that no other display company has been able to use because they don't have our process capabilities. But what this allows for is oxide is a very robust backplane technology. So the backplane is the part of a display. Display has a front plane, LCD OLED, which takes pixels and turns them into light. It's the backplane, which is kind of the compute matrix, which sends the signals to the pixels. And that technology is fundamental, just like the front plane. And oxide is a very robust, mature, and inexpensive backplane technology, which has been plagued by a terrible performance. The problem with oxide is, and it's got very low power consumption, is that it has terrible performance. You can't do fast displays, they're grainy. And so what's special and magical, and it's truly magical about our HMO breakthrough, is we bring high mobility to oxides. It's never been done before. So you get this very robust, low-cost technology, which is arguably the #1 backplane technology on the planet. We will be taking this to market ourselves, and again, we expect to be in mass production in 2024. What's so powerful about both eLeap and HMO is their ability to dominate kind of the competing technology set in kind of every display category from small to big. And so clearly it's the case. Our biggest fab is G6, which is not optimized to do things like televisions. HMO can go everywhere. So, for us to license out this technology is a very powerful way for us to develop both a new revenue stream, but also to take our technology to all sorts of places with technology partners in doing so. So we're very excited about it. Next page, please. In the metaverse space, we call it the resolution revolution, which is true. The thing that's important to know about the metaverse is you see these PPIs like on the screen right here. And by the way, we're the only company in the world that's shipping a 1200 PPI high resolution in the metaverse, and this is the VR headset. No other company can create it. Nobody. It's really hard technology. And when you look at it, you're like, okay, high-end smartphones are 400 to 500 PPI. Why do you need 1200 in a headset? And the answer is pretty straightforward. It's all about the lens. When you've got this thing right in front of you, in order to give it kind of the full kind of immersion that you need to use a lens which magnifies. And so typically the lens is a 7 to 10x, and that's a way of saying when we're shipping a 1200 PPI display, it's got a 10x lens on it, you're actually only experiencing 120 PPI. And so there is this huge demand for driving higher resolution in this space, because at heart, the metaverse or kind of the VR headset world as a subset of the metaverse is all about immersion. And if you're in this kind of funky Pong, 30-year-old Nintendo sort of world, you're not getting immersion. You're in this kind of funky, kind of poor graphic quality world. So it's really, really important to generate high resolution. That's the use case for these high resolution displays. And again, we're number one in the world in this. So we had announced we're going to 2000 PPI by 2025. We're now in development on 2500 PPI. The customer demand for this is absolutely voracious. And second, on the bottom of the page, we are taking our HMO technology into the VR space that will deliver high performance and lower energy consumption for the metaverse also. Next page, please. For Real Clear, again, this is a unique technology. We're using a completely different technology set that's based in a very sophisticated set of material science capabilities. It was so hard that we first started with kind of something that was basically a handset, because it's very hard technology. And yeah, that's what we do. At the end of the day, if you're going to contribute to the world, you need to do things that are hard. And so we started with this kind of several-inch model. We progressed up the technology to 12-inch model, which we're shipping now. We've now fully developed a 20.8-inch model, which will begin shipping next year. And we're taking this technology to brand new areas. And it's just truly disruptive. For all intents and purposes, there are folks out there who say they're shipping transparent displays. It's only one-way transparency. It's actually at low resolutions and not fully transparent. So our transparency is like a window glass. So it's truly transparent, as you can see on the page. We're taking kind of, just kind of shattering what a display is. The display at this point in time today is something which you put in front of you, which blocks, and presumably this is what what you're currently watching on display right now. It blocks everything behind it, and instead we can turn the display into a window. It's really powerful and interesting, and particularly with the 21-inch model. As I've begun showing this to customer, it's just kind of mind blowing. So we have very high expectations for this. We've actually kind of put into our model that we're going to get kind of 0.001% of the global display space, but it's increasingly obvious this is going to be a major growth driver for JDI. Next page, please. In terms of the financial targets, as I put in front of you, one of the things that's worth pointing out is that these numbers show no licensing fees in them. We decided that we would show numbers that are conservative relative to what are we going to manufacture with our technology set. and what kind of income stream does that generate? So there is actually substantial upside to these numbers should we succeed with our licensing. And it looks, given the discussions we're having with technology partners, so that looks like it's going to be successful. And another thing we thought was that this was important to do when we announced this in May was to show year by year numbers. It gives an opportunity for even monitor our activity in the space. Next page, please. Look, we're committed to doing the right thing for the planet. And increasingly, that's not only the things, the choices that we make in terms of minimizing our environmental impact, but a set of green technologies that are really powerful for customers. So I mentioned, for example, eLeap allows for 50% reduction in energy consumption. HMO is a 40% reduction in power consumption. eLeap, has a non-massless process. It's the only one in the world for OLED. It means you don't have to use all these toxic chemicals to clean your masks on a daily basis. These are very powerful, environmentally positive technologies. We're pleased to say that FTSE has recognized our commitment to these ESG concerns, and we entered the FTSE Blossom Japan sector index, which is an ESG index. Next page, please. Across the board, we're trying to do more and better because we should. And so we have been producing using solar power at a Tottori fab in Japan for a long time now. From last month, we began solar power generation in China at our manufacturing subsidiary there also. Next page. And this is the last one. It's something we're not touched on before, but it's actually really very important. I won't say the name of the massive kind of U.S. Cloud vendor who told us, but it appears that we're doing things that are first in the world. We're clearly pioneering the display industry's adoption of the cloud in our design activities. This is very, very powerful for three reasons. One, we go to the cloud. It can substantially increase our productivity. And two, it also allows for much lower operating costs. And three, as these cloud platforms, as we're using them, the data centers are using renewable energy. So we have three positives that come from this. But this is, we're a manufacturer, but there's a significant software component to what we do in terms of us automating our processes, particularly CAD and CAE processes. And it's something that we'll probably provide more disclosure to going forward because it is a core element of a competitive advantage. And we think we're actually building out our advantage relative to many of our competitors in this space. Those were my prepared remarks. What is going on right now, JDI, is extraordinary technological transformation in which we think we're going to deliver. And this primarily shows up in 2024 in terms of kind of the big revenue run that comes from it, but literally technologies that have never been in the world before with substantial advantages in cost performance. These are not kind of improvements of 5%. These are massive improvements. So thank you very much for paying attention to us. It's a way of saying the technology deliverables that I've enunciated for today are the most important way to understand whether or not we're on track. And as I say, we're in customer ship at the sample point for eLeap. There are a lot of things going on. So thank you very much. And we'll continue working hard for all of you. Take care. Be safe.